Ladies and gentlemen, good day and welcome to Inox Wind Limited earnings conference call hosted by ICICI Securities. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikhil Abhyankar from ICICI Securities. Thank you, and over to you, sir.
Thanks, Angel. On behalf of ICICI Securities, I would like to welcome you all to the Q4 FY24 earnings call of Inox Wind Limited. Today we have with us Mr. Devansh Jain, Executive Director, Inox GFL Group, Mr. Kailash Tarachandani, CEO, Inox Wind, Mr. Akhil Jindal, Group CFO, Inox GFL Group, Mr. Rahul Rungta, CFO, Inox Wind, and other senior members of the management. So, without much further ado, I would like to hand over the call to the senior management for their opening remarks, and it will be followed by the Q&A. Over to you, Mr. Rahul Rungta, sir.
Thanks. Good evening, everyone. A very warm welcome to all in the quarter and full year ended 31st March 2024 earnings call of Inox Wind Limited. The company announced its results at its board meeting held today, Friday, 3rd May 2024. The results, along with the earnings presentation and press release, are available on the stock exchanges as well as on our website. Let me first take you quickly through the financial results for Q4 and FY24 for the company. For the quarter, on consolidated basis, Inox Wind has reported revenue of rupees 563 crores in Q4 FY24 versus rupees 194 crores in Q4 FY23, an increase of 180% YOY. EBITDA of rupees 140 crores in Q4 FY24 versus EBITDA loss of rupees 25 crores in Q4 FY23. Profit after tax of rupees 38 crores in Q4 FY24 versus loss after tax of rupees 115 crores in Q4 FY23. Now I will take you through the FY24 numbers on consolidated basis. Inox Wind has reported revenue of rupees 1800 crores in FY24 versus 754 crores in FY23, an increase of 139% YOY. EBITDA of rupees 344 crores in FY24 versus EBITDA loss of 242 crores in FY23. Loss after tax of rupees 51 crores in FY24 versus loss after tax of rupees 697 crores in FY23. Our EBITDA run rate for the quarter and our healthy order book of 2.7 gigawatts sets us on a strong footing for FY25. Further, despite a huge ramp-up in our operations during the year, especially Q4, we have been successfully able to reduce our external net interest-bearing debt to rupees 655 crores as of FY24 end. I would now like to hand over the floor to our CEO, Mr. Kailash Tarachandani, for his remarks. Thank you.
Good evening. As I said before you today, at the end of an action-packed FY24 for Inox Wind, it gives me immense satisfaction to have been able to achieve what we had set out for the start of the year. We had guided to become profitable during FY24, and we have achieved this feat in quarter 3 itself. Further, quarter 4 has been even a better quarter for us with the ramp-up of the manufacturing of 3 megawatt wind turbines. The macro outlook continues to be extremely favorable. This year itself, peak demand is expected to touch 260 gigawatt, 7% higher than the last year. The pace of power demand growth is expected to remain strong in the coming years, requiring capacity addition at a rapid pace, particularly renewables. Over the next 8 to 10 years, India plans to add around 100 gigawatt of wind power capacity on the current base of around 46 gigawatt. In FY24, over 50 gigawatt of renewable capacity was awarded through auctions, including over 15 gigawatt of hybrid, RTC, FDRE project and 2.3 gigawatt of plain vanilla wind, resulting in over 10 gigawatt of wind capacity alone to be set up. The macro tailwinds are reflected in the strong order book, which is standard 2.7 gigawatt today. Our other initiatives, including ramping up operations, strengthening our balance sheet, coupled with our large order book, will translate into higher order execution from FY25 onwards, resulting in strong growth in profitability. Q4 has been a milestone quarter for the company as we successfully transitioned to 3 megawatt wind turbine production from 2 megawatt. Our Q4 EBITDA run rate places us on a strong footing for FY25. We continue to maintain our EBITDA margin guidance at 14 to 15% for full year FY25, though there could be quarterly volatility. Our debt levels have also come down drastically, and we expect to be net debt-free within H1 FY25. We are now geared up for gigawatt-scale annual execution and are taking further actions to ready ourselves for 2 gigawatt of annual execution in the medium term. Our healthy order book of 2.7 gigawatt to a mix of all customers, PSUs, IPPs, C&I market, and retail market. We are seeing very strong demand from all customer segments, are in advanced stages of discussion with various customers, both existing and new, for future orders. We have a healthy mix of turnkey and equipment supply orders. We have also secured a 210 megawatt order from Hero Future Energy. This is a significant win, as this is a repeat order from a large Marco C&I player. Looking at the next decade of opportunities, we have also secured the license of 4x megawatt wind turbine platform. The 4x wind turbine, the megawatt wind turbine with a large rotor diameter, will be a revolutionary product in India. Further, improving energy yield, reducing levelized cost of energy, and offering superior performance to harness wind sites optimally, thereby setting new benchmarks in the Indian wind industry. With this, I will now like to open up floor for question and answers. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants of the conference, if you wish to ask a question, you may please press star and 1. The first question is on the line of Subhadeep Mitra from Nuvama Institutional Equities. Please go ahead.
Good afternoon, and thank you for the opportunity. Firstly, I think in your opening remarks, you did mention that we've seen close to 10 gigawatts of wind tendering. If you could please help us understand, how much of this did you mention was hybrid and how much was wind alone?
Yes. Hi, good evening. So, around 15 gigawatt plus of hybrid FDRE and RTC tenders have been awarded over the course of FY24. And we believe that out of this 15 gigawatt, roughly around 8 to 9 gigawatt is the effective wind capacity which needs to be set up for these projects. And in addition to that, there is around 2.3 gigawatt of plain vanilla wind projects which have been awarded. So, roughly around 10 to 11 gigawatts is the effective wind capacity which has been awarded over the course of FY24.
Understood. And how do you see this market, going ahead? So what I wanted to basically get a sense on is, how do you see the FDRE and the CNI bidding market moving ahead? As you're mentioning, maybe that number is up to between, let's say, 10 to 12 gigawatt. And on top of that, there is a larger CNI piece which will add to the wind. If you can just throw some color on that.
So, if you look at the goal set out where India wants to achieve 140 gigawatts of wind by 2032, we're looking at a scenario where we want 100 gigawatts being implemented in in the next 6 to 8 years. Now that would effectively translate to 12 to 13 gigawatts of wind power being supplied to the grid. Now it's very difficult to put a number. Effectively, if you start seeing now what's happening on C&I, if there are more hybrid and RTC and FDRE tenders, because in FDRE, whatever capacity you build, you need to put 2x of that onto wind. If that starts happening, potentially you could have a scenario where the Indian market becomes 15 to 20 gigawatts of wind requirement. Now, realistically speaking, that's difficult simply because putting up so much wind within a period of time onshore within 4 or 5 key windy states becomes a challenge. But I think realistically speaking, the Indian wind market could be a 8 to 10 gigawatt play per annum comfortably as we move along.
Perfect. And on the same lines, you did mention that you are preparing yourselves for gigawatt scale execution and are targeting, I think, 2 gigawatt of execution in the medium term. Would it be possible to show some timelines that are you looking at, let's say, 1 gigawatt in the next 2 years and 2 gigawatt over what period?
Look, I think I'll just leave it at the point that we're scaling up, I think, in a very, very smooth manner, in a well-organized manner. We've taken multiple actions over the course of the year, as Kailash touched upon. If you look at some of the guidances or if you look at some of the investor reports out there, they talk of 800, 1200 megawatts, ranging between those numbers this year, next year, etc., etc. I think we are, as a company, virtually in position for a gigawatt scale execution. Naturally, we are gearing up further to be able to have the capability to do 2 gigawatts a year. I wouldn't want to say more than that, but I think our internal targets are higher than what's out there. I believe, consistently been beating whatever expectations the market has from us, and I hope the whole team put together keeps doing that as we keep moving forward.
Understood. Thanks. And lastly, just wanted to understand that I think the execution for this year, if I remember correctly, the guidance was about, I think, 450 megawatt. I think the numbers that have come in have been slightly lower. Is there some spillover that we are seeing which will show up in the first quarter, second quarter?
Look, I mean, I don't think we gave any specific. We've given guidances broadly for targets for this financial year and the next. Now, whether we've done 380 megawatts or 420 megawatts, I mean, I would only urge you to look at where we started from. We've really moved from 70, 80 megawatts over the past 5 years when the sector was dead to now about 380 megawatts, which in itself is almost 5.5, 6 times from where we are. 30, 40 megawatts is, I wouldn't even call it a spillover. I mean, in any case, I think we should possibly be much more than what we've guided for. And, 100, 200 crores here and there, 1 month here and there is not really going to make much difference in our scheme.
Fair point. Thanks a lot for answering that one.
Thank you. The next question is from the line of Smitesh Sheth from Radiant Securities. Please go ahead.
Hello. Am I audible?
Hello. Yes, you are. Please go ahead.
Could you please presently what was the area?
No, you're not audible. Please, if you can speak a bit louder.
Hello.
Sorry to interrupt you, sir. Can you please come near to the mic and speak?
Could you please suggest what was the India level installation, wind installation in Q4, sir? Any rough idea about the industry-wise installation happening in Q4?
So, over the course of FY24, installations for wind was around 3.2 gigawatts. And in Q4, if I'm not wrong, it would be roughly around a gigawatt.
Okay. Thank you.
Thank you. The next question is from the line of Rohan Vora from Envision Capital. Please go ahead.
Hello, am I audible?
Yes, you are. Please go ahead.
Yeah, thank you for the opportunity. So, the first question was, from next year onwards, FY25 onwards, what could be the hit rate that we can expect? So, say 10 megawatts of tenders come out and we bid for them. What kind of hit rate are you expecting broadly on that?
I'm able to understand your question. Your voice is a bit muffled.
Okay. Is it better now?
Slightly better.
Hello. Is it clear now?
Yeah, if you can speak a bit slowly. Yeah, please go ahead.
Yeah. So what I was asking was, what kind of returns can we expect, when we bid for tender? So for example, if 10 gigawatts of tenders come out in FY25, and we bid for them, what kind of returns are we expecting, that will be converted into our order book?
So we are not developers. So whenever wind projects are awarded, we come in the second stage. So after the award of the project, the projects are then awarded to the OEMs. That's where we come into the picture. And what we've guided is all there in the analyst reports for both FY25 and 26. You can read through it and get a view on what will be our execution numbers for both FY25 and 26.
Okay. And sir, what would be our fixed cost per year, below our contribution, just a ballpark number?
Yeah. So overall, Rohan?
Hello?
Yeah. So, fixed cost for the overall Inox is around 140-150 crores for the year.
Okay. Thank you, sir. I'll come back to the queue.
Thank you. The next question is from the line of Deepak, who is an individual investor. Please go ahead.
Yeah. Hi, good evening, and congratulations for the outstanding results. My question is, if we see consolidated result, overall basis, we have earned around 56 crore annually, and out of this, 35 crore is current quarter. So I would like to know the breakup of this other income. What are the components?
Okay. So this 35 crore, you're talking about the total other income for the Q4. So this includes our overall, wind and IGSL both green, and it includes some value-added services into the green, and some scrap-related sales or insurance claims. So these are the non-operative income in Q4.
Okay, so there are no interest income and all this in this category?
Yeah, again, please come again.
No, I am saying, is there any interest income kind of thing in this other income, or it's the value-added thing other than interest income?
So majorly these are value-added services, which would be repeated in nature. But as it is a value-added service and it is not related to core operation, your revenue item, that's how it is classified as the other income, and that would be repeated in nature, and that is the majority out of it.
Okay, so in future following quarters also, the kind of income will be with such quantum, or it will be lesser or more? Can we expect?
It depends on the quarter-on-quarter basis, but majority of the same will keep on coming on the quarter-on-quarter basis.
Okay, thank you.
Thank you. The next question is from the line of Dhavan Shah from AlphaCurate Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So my question is on the execution side. I think we were of the estimate that this year would be around roughly 450 megawatt FY24, but we did roughly 129 megawatt in the last quarter. So again, the question is, what led to lower execution for Q4? And on project-wise, I think in the third quarter presentation you mentioned based on the different orders. So can you share, the execution timeline based on the different orders like CESC, NTPC, SECI, and the other ones? How it would be executed in FY25?
We have not given any official guidance. We have just, if you see from that point of view, we have grown almost, 6 to 7 times, from that perspective. And general guidance, we always are looking from, execute from 600 to 800 megawatt.
If you see for this year, next financial year, we have guided for 800, and the year after we have guided for 1200. But also you have to keep in mind there could always be a volatility for a quarter or two. There could always be certain slippages. So you can hold for a quarter on a quarter basis. What you have to look at is from an annual perspective. So for next year, when you look at it, we have guided for 800, and the year after 1200.
We already have an order book of 2.7, which gives us enough confidence for this kind of an execution and even beat that.
So out of 800 megawatt execution in FY25, how much it could be from CESC, NTPC, and the other orders?
I don't think we can share those details. I think the order book is in the public domain. As we receive orders, we put that out in the public domain. And frankly, we will not share details of who will supply what to in which quarter, but it's going to be a mix of all these customers. And as we win orders, I'm sure you will be keeping track of the fact that there are certain timelines. Some are 18 months, some are 24 months, some are for the coming 2 quarters. So it's going to be a mix of all these customers.
Okay. I think 2 months back there was news that the SECI would again start the reverse bidding like it was in FY17 or 16. So how do you see if that starts for the wind sector itself? Do you see the same kind of challenges what we faced during that time?
No, we don't see any challenges. It was a non-event, and this was in fact an internal note which came out and was published by a media agency. But in fact, it was a non-event. Even after that, we won another order, a repeat order from Hero of around 210 megawatts. So it did not matter at all for us.
If you look at it, majority of the orders earlier were already on this path. So it is only the plain vanilla wind orders were where they were discussed on this note. And as we have said in the past, we have come out publicly, this is a non-event. Our order book is very healthy and we continue to win a lot of orders despite this.
No, I think we've been on record across all news channels that 90% of the sector operates on reverse auction, which is RTC, hybrid and FDRE. So frankly speaking, 10% of the sector supposedly being on closed bidding, whether it happens, doesn't happen, makes absolutely no difference whatsoever. I think we've been on record. There have been multiple public statements made by me. And as we continue to see, we continue to win large orders. Current order book is sold out for the next 2.5 odd years. So frankly speaking, as we said multiple times, this is an absolute non-event.
And in the standalone accounts, I think for this quarter, we have a ECL provision of 100 crores. So what is that related to and for which project?
So as we are transitioning from the 2 megawatt project to 3 megawatt project, we on a conservative basis we have taken an additional provision of 200 odd crores in our books of accounts. But as such, we are that is a non-cash item, and that doesn't have any impact on our cash positions.
But I didn't understand. Can you please explain again or in detail?
Yeah, hi. So I think you must refer our note number 16A in financials. But broadly, these all are the non-cash line items of rupees 14 crore. I again repeat, non-cash line items. We have provided for the higher ECL on our debtors as we have completely transitioned from 2 megawatt to 3 megawatt now. Please refer this note of 16A in financials.
Is there any expected losses which we are foreseeing, from that particular customer, and that's why we have provided provision?
No, this is as per our regular ECR policy. So since the 5 years we have been doing that, and there is no particular, change in that, event in that. Yeah, there is no trigger.
Okay, sir. Thank you.
Thank you. The next question is from the line of Shweta Dixit from Systematics Group. Please go ahead.
Hello. Hi.
Yeah, please go ahead.
Yes. On the execution side, I understand there could be some volatility in terms of execution number, but if you look at the blended realization, that has dropped significantly from the first quarter of this year. Like we were executing only 2 megawatt turbines in the first and second quarter, and our blended realization has dropped from 5.2 crore per megawatt to 4.1 crore per megawatt this quarter. So could you please explain this drop in realization?
Yeah, hi. So if you remember, we stated in our Q3 call also that we launched our 3 megawatt product commercially and started the supplies in the month of December. And it has taken a quarter for us to ramp up. The supplies are in full swing today. But yes, there may be quarterly variations, which is there. And because there was a ramp up in this quarter, there were supplies of some of the components. Some of the components will be supplied in Q1. So this is something which happens in the normal course of business.
Shweta, if I may answer that, because you're transitioning completely from 2 to 3 megawatt, obviously it could not be perfectly timed. You can't have all the nacelles, the blades, all the towers going out at the same point in time. Yes, we had that going to the extent of 90% accuracy in our 2 megawatt product. But now on the 3 megawatt product, over this and the next quarter, we'll make it uniform. So to that extent, what you're seeing in revenue realization is not gone down, but basically there are certain blades and towers which have not been built. And going forward, you may have a scenario where you may actually see higher realization because you'll have more blades and towers and less nacelles. But this will neutralize and make itself, aligned over the next 1 to 2 quarters. But certainly the realization in 3 megawatt is more. That is why we're getting to a very strong profitability scenario. Otherwise, we would have been struggling on the profitability front with the 2 megawatt product.
I understand, but even though it is a milestone and component-wise breakup, but still, the sub-component-wise also aren't 3 megawatt components expected to be, fetch higher realizations on a standalone basis. Also, it's around 3.6 crore per megawatt. If you look at 129 megawatt of execution. So I just wish to understand what kind of realization do we build up, especially for FY25, considering there could be volatility in terms of the execution guidance there.
So you may have volatility in terms of quarterly. In terms of the full year guidance, we've given an 800 megawatt guidance, and we've given EBITDA guidance of 14 to 15%. So on a full year basis, we are not suggesting volatility. We're suggesting volatility on a quarterly basis, number one. Number two, you have a mix of turnkey, you've got a mix of equipment supply, you've got a mix of equipment supply with some value-added services. So as a thumb rule, it's good to take a 6 crore number. So that broadly means if we do 800 megawatts, so 4,800 odd crore top line number is a very realistic scenario to look at. Okay.
Sir, if I heard it correctly, the net interest-bearing debt as of end of FY24 was 655 crores, if I'm not wrong?
Yes, you're right.
Could you...
given the breakup in our quarterly presentation also, if you refer to the second last slide of the presentation, the breakup is given for your reference.
Okay, I'll just check that. I'll come back in the queue for further questions. Thank you.
Thank you. The next question is from the line of Mohammed Namir from Fairdeal Petrochem. Please go ahead.
Yeah, good evening. I had only one question. What is the reason behind issuing the bonus?
Yeah, so I think because, if I may jump in, because we were receiving a lot of feedback from the investors, and in terms of the price that has really run up in the last 1 year, we felt it is important that we consider the investor feedback and we understand their intentions behind the shares to be more liquid and to be in a fair reach of most of the retail investors. And with that feedback and with that background, the company decided appropriate to look at the bonus as one of the key elements of rewarding the shareholders. And that is where the board has decided to issue the bonus. And clearly from 150 rupees to 600 rupees journey is something that was unprecedented, and it was one of the best performing stocks in this segment. And that's why the board in its cumulative decision and wisdom and also the feedback from the investors decided to go down that path.
Thank you so much. Thank you.
Thank you.
Thank you.
The next question is from the line of Pradyuman Chaudhary from JM Financial. Please go ahead.
Hi, congratulations on a great set of numbers. So, just wanted one clarity. We have around 2.5 gigawatt capacity, right?
Yes, that's correct.
So, why, of course, maybe we are being a bit conservative, but why are we suggesting an execution of 800 megawatts for FY25 and 1200 megawatts for FY26, considering the 10 order wins